Good morning. It is a very good day. Why is it a good day? Because we're gathered here today on Saturday, 12/15 of 2012. Merry Christmas to everyone. This is called a $2,550 put on the Nasdaq 100. We've already done the Nasdaq 100 chart analysis in the video prior to this one. We already know where the Nasdaq 100 will go. And if we come down here to test the 2550 area, this is a gap area right here in the MMT market maker platform. We could come down to that strike price. That 2550 is right here, just like it is in the video, right here, right here. So there's a mathematical gap ratio, and within the mathematical gap ratio open here is that is the ultimate test, and then we're going to look at this one at 2550 right here. That's a mathematical equation. Yes, we're up here at 2655. Yes, it's 100 handles below the market, but let us not forget that this last high here was exactly 2694, and it dropped in 3 days down here to 2628. So it can work its way down in the tree, and we would take a look at the value here of the 119 2013 2550 put. Okay. One of the things that we're going to show you is that the low over here was at $18. In the second day value gain, the high was $22. The third value day gain went up to $28.40, and it went up to a high of $35.40, and then the close is $33.67 on the contract. I want the MMT to set an alarm for me, falls to 31.8. I also want another contract at $30.40 and lower. No matter what, I still want that area, 30.4. Then I want to get into the values of where that contract. So if the Nasdaq 100 was to gap open up in pre-market futures and go higher on Monday, then the closing value here would drop down to these alarm values, which would ultimately be our entry value. So I also want another alarm set in case there is a gap. If these contracts were to get down, let's say to 2570, I need to know that. And then we would be taking a look, because we know that the lows were $18 and $23.80 is probably, that would be, so if we have any upside volatility, and when these contracts, so if we gap open up in the Nasdaq 100 and they gap those down to those values that I'm talking about, that's where we're going to buy them. Yes, it is the month of December. Yes, Christmas is coming upon us. Yes, there is fiscal cliff. Republican Democrats cannot seem to come together for whatever dysfunctional reasons. Who knows why? But they're not. The thing about it is, directional price movement will be within the headline volatility of the U.S. government and the so-called fiscal cliff. High frequency computing machines is that the volume is going to be done lower, and we will be range bound. The 2550 put went from a closing low of Thursday of 28.40. It made it up to 35.40. They don't move as high as the 26.50 put because it's $100 below the strike price. But there still is a gain from 28.40 to 35. Just $4.15 range from the low of Friday to the high. And that's going up in value based on the Nasdaq 100 falling in value. When we break the key support levels, as I've instructed the MMTs, these will go up in value. There is also a call side value here. If I take a look here at the calls, and one of the things that we're going to do is we're going to monitor the value of this $2,600 call. And I'm going to put the call chart in here, MMT. The calls were inflated, just like these were deflated, and these were going to go up in value. They're all based on directional movement in the Nasdaq 100. So when the Nasdaq 100 is falling in price, the call value high, MMT, right here was $120 a contract. It was a big trade. If these contracts were bought at $39, they just peaked at $120, and now they're down here to $83 a contract. The reason why we're watching the 2600 January call is because when this value continues to fall, we know what will happen. What will happen, MMT, is the following. The 2550 put will do what? Will go up in value. So when this falls in value, this is the $2,600 call, $120. As it falls in value, the $100 below the strike price, in fact, it was more than that, but these keep going up in value. These go down in value, and this side of the market goes up in value. When Nasdaq 100 sells down, these continue to go higher and higher and higher, and they got a long way to go. So this is in how much these are inflated. They have to come down, and these were where you wanted to be on this side of the market. They already took all the premium. And look at here. Let's just do the invert. These were $96, and then they took them to the low of $18. Well, here they're $120 in value, and now they're at 83. So when these come back down here toward $36 in value, because it's an in the money call, they're going to take all that premium out. The 2550 call right here, look, it's going to be way up here in value. It's going to be up in these values, $51 to $60. You know, it's got values here, $51 up here. Shorter term, it's got a $47 value on the lows here. Okay, and the highs here were $41.90. So there's still upside in these puts as long as this Nasdaq 100 continues to sell down. The way to get the entry on the 2550 put is to take advantage in the pre-market futures. If they get gap open up in value, the Nasdaq 100, in the futures, they're going to gap these options on the opening bell down in value where we could buy them. So when the index gaps up to resistance, these gap down to support in value, and I buy them. And at resistance in the Nasdaq 100 reversal from my purchase, they go back up in value. So I've set the alarms on the 2550. I've got the 2550 put set up here with my MMTs, and we also know what the call value is. So let's go to the marketplace right now and take a look on a shorter level. Let's do a monthly January, and let's take a look at the $2,600 call over here. It's a monthly expiration. They close on 12/22. People are going to be on vacation. They were just $91. The low, 45. We're going to be watching the value. MMT on 10 or 12/22 expiration, $2,600 call. It's 28 points in the money. I mean, it's in the money. Set me an alarm. Falls to, I would say, in the value chain. So we closed at, what did we close at? We closed at $46. I want alarms at $44.80, $41.60, $39.70, 30, it'll be 34.7 and 32.8. Should the market continue to sell down, the puts will go up, and we'll have to buy this one right away. And once this loses its value in those alarms and we get support, we would look at coming out of this trade, and then we would buy the calls maybe, depending on what the yearly close of this Nasdaq 100 is. These are index options. These are January. This is a December 22 monthly 2600 calendar 2012 expiration in dollar value terms of who makes the greatest gains in both directional sides of the market. I've concluded the Nasdaq 100 with MMTs on that $2,600 call. Falls too. Okay. The put side, well, the highs up here are $120, and so if this is the call side, that's the 119. We just want to know that if this ever gets down to, let's say, 75, 70, I'm going to want to know this on the 119 calendar 2013. Thank you very much. This is how to trade the fiscal cliff.